Okay, so today we're going to cover Vital Farms. Okay, this is a stock that specializes in selling pasture-raised eggs, butter, and those are their main products, but they do have little other snacks and stuff. But here's what the product looks like. I've actually been buying these eggs for like 2 years now, so I'm very familiar with them. And the stock went IPO last summer. It's been about 1 year, and it IPO'd at $35, and now it's down over 40%, all the way to $20 a share. So it's come down quite a lot, and it's still a pretty small company, but it's growing very fast. The market cap is almost $900 million. And as we can see here, throughout the last couple of years, revenue has been growing super fast. Earnings have been a little bit more volatile, but as it says here, their revenue for 2020 was $214 million, which was an increase of 52% year over year. And then its earnings were $8.8 million, which was an increase of 268%. Okay. And so if we go ahead and dive into some of these numbers, we could see that for this year, analysts have them doing 17% revenue growth. And then for next year, they have them doing nearly 26% in revenue growth. So the company's expected to grow a lot, and the price targets are around $31 a share. Or in this website, it said, yeah, $31 a share, which is about a 52% upside from here because the stock's trading at $20. So if you look at some of the numbers, you can see that they have a great balance sheet. They have great profit margins and everything like that. The problem is the valuation's kind of high. So even though it's a fast growing company, the forward PE is still a 208, and the trailing PE is an 83, which, even though that's come down a lot from 357 where it was last year, an 83 is still super high. So they're really going to have to grow into this valuation for it to make sense. But the good thing here is, so this company is very popular in Target and in Whole Foods. Okay, and in the since Amazon owns Whole Foods, they also invested a stake into Vital Farms as well. Then there's other companies like Vanguard and I think BlackRock. They own part of this company too. So there's big investors in here. And if we look at some of the statistics, we can see that the valuation's high, but the balance sheet looks super good. Okay, we have current assets at 137 million with current liabilities at 25 million. That's a great ratio. Then we have long-term assets at 34 and long-term liabilities at 3. So fantastic balance sheet. If we go to cash flow, we can see that net cash flow has been a little bit more volatile. And so you can see it's been up and down because this past year it looks like they spent, where'd they spend? 1 year they spent $68 million. See, so it wasn't an acquisition. They must have, they spent $68 million investing into something last year. So that was a little bit out of the ordinary. And so that hurt their cash flow just a little bit. So that's something to take into consideration. Then if we look at the statistics here, we can see that this is not a good sign. From year over year, they've added 20 million shares. It's been a 52% share increase. So I understand they're trying to raise more money, and this is like they just IPO'd last year, so it kind of makes sense. But that's going to dilute the shares so much that it's no wonder why the stock is down nearly 50%. So that's one problem. Now, if we look on Seeking Alpha, we can see year over year, all these different metrics are up huge. So revenue was up 45%. EBITDA was up over 300%. Net income over 700%. So all those statistics look fantastic. But my main concern with this stock is, are people, so it said on their investor presentation that they are number 2 egg brand in the USA. And for pasture-raised eggs, they are the number 1 in that industry. But my problem is even though somebody like me will spend a couple extra dollars, so it's like I think it's like $5 a dozen, okay, for these Vital Farms eggs. And I just feel like, is there enough people out there that are willing to pay extra for just because their eggs are the chickens are taken better care of and they might be a little bit better for you? Okay, I don't think I don't see there being enough people in that industry to change. So that's my main problem is I still think people are going to keep buying the cheaper eggs, and I mean I know they're expected to put up big numbers, but I just have a hard time seeing it become, them getting a big enough market to grow that much. So unless they put up some great numbers for this Q2 of 2021, or the stock falls maybe to $15 and the valuation comes down, then I don't really plan on buying this. So I mean, if the valuation gets better and it's trading at a PE of, let's say, 20 or something like that, maybe 25, then there's a good chance I'll buy some. But I mean, if you're interested in a company like this, I think the main thing is just, do you believe that, in upcoming years, is there going to be enough people that are going to want to will be willing to pay extra for pasture raised eggs and pasture raised butter and stuff like that? I don't really know that there's a market for that that's big enough. So that's my main problem with it. But if you think that there's going to be enough people, then go ahead. This could be a good stock for you.